Building a playbook is hard. It takes many traders on our desk years of screen time to build playbooks for different markets. Today we share an exercise from one of our traders that shows us how he gets extra reps in to build his playbook faster. Hi, I'm Jeff Holden, Head of Recruiting at S&B Capital, a proprietary trading firm located in Midtown Manhattan, trading equities, options, futures, and crypto as automated and discretionary traders. We are looking forward to sharing this trading exercise with you. So we're here today with Justin, who's a senior trader on our desk, right? Is that right?
It's been about 4 years. So.
Okay. So we're here today with Justin, who's a senior trader on our desk. He is sharing an exercise with us that you use in your trading, and you use, well, why don't you tell us how you use it?
Yeah, sure. So I mentor new and developing traders, and every Friday we'll do a Zoom meeting, and I'll just go over my top trades or top ideas from the past week or so. Basically dive into detail and do like a bar by bar analysis and really talk about like the psychology of the trade and what I was thinking, because I feel like that helps a lot and not enough people talk about that. And you know, I didn't go into this thinking that it would be so beneficial for me, but it really is, and this is how I think I've gotten a lot better. So we'll just dive right into it.
Yeah, and just for context, Justin's probably one of the most consistently profitable traders on the desk as far as your P&L curve has been on a pretty steady upward trajectory. You've mitigated a lot of the drawdowns that most traders have gone through. And so that really comes down to A, selectivity, and B, selectivity and execution. And so this is probably a part of why this exercise becomes so important.
Right, and I would say this month in particular has been actually one of my more difficult months. So when I notice myself having 3 losing days in a row, I know that there's something wrong. So that forces me to size down a little bit and get a little more selective with what I'm trading. And these examples will show you, a couple of those ideas.
Cool, thanks.
All right, so this EVFM is running off the back of the Roe vs. Wade overturning. They sell women's contraceptive. Basically, it's up 350% in 3 days. Just from doing a quick 5-minute search about this morning, I found out that the company has 2.5 months of cash left. And 2 months ago, they priced an offering of shares and warrants, which were twice its market cap. So this is hot garbage, we like to call it.
Okay.
All right. So
so that's the catalyst. Is we're trading a hot garbage stock. Okay, that's good. What I want to not kind of go over too quickly is, can you cover the different time frames that you're looking at here?
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com to register for this free intensive workshop. You're going to learn more in a couple of hours from this trading workshop than from years of online education.
yeah, sure. So this is a 1 minute, 5 minute, 15 minute, just so we have our bigger picture view. We have a 30-minute, hourly, and daily chart. When I'm trading, I normally have up to 1, 5, and 15. But of course, before I trade something, I always know what's going on the daily chart and higher time frames. Want to make one point before we jump into this for today. Yesterday was day 2 of the run. Anytime I see a low float, reclaim green on the day, reclaim the opening price after 10:30 and it's back above VWAP, that's not a short to me. And that has saved me so much money. So Yesterday, it definitely looked overextended, right? But once it reclaims VWAP, it's past 1030, it's holding above VWAP. That's not a short. If it was going to be weak, it would have held below VWAP, it would have been making lower highs. Okay? So now today, it's starting to get juicy. Now it's gapping up to $1.40. Like I said, it's up 350% in just a couple days. And then just one thing that I'm noticing right away is this $1.30 level is really important. Okay? Pops up, fails, after hours yesterday, 4 a.m. open, pops up there, fails, gets above it, holds it. And then we open up, we fail right below there, we're holding below VWAP, and you could take a short here. I didn't, but I do think that there is a short here. I think I was paying attention to LI and NEO, and I had this on the back burner, but you can see it moves lower, and that's a good trade, right? Puts in a higher low, puts in another higher low, so now you have a series of higher lows, and all of a sudden there's some news that comes out, and this is where I start to get really interested. So they had a news about a patent. We don't need to go into detail about it, but I thought it was really interesting that off that news, it pops up into $1.30, gets slammed right back down. So my thought is, okay, there's longs trapped on that news and there's shorts that got scared and hit out. So what's going to happen when they see it slam right back down? Well, the shorts are going to get back in and the longs theoretically should get scared and we should break down further. So I took a short and my risk was above $1.30. You can see we come back into this trend line and we start to hold it. And I'm watching now, this is where I start to like really zone in on the tape, look at the bids and offers. They're holding it here. They let it drop down a little bit and it pushes right off and it starts to curl up. Even though my stop is $1.30, this isn't really what I want to see and this isn't what I expected to happen. I thought that, for the reasons that I just mentioned, it should break down, but it didn't. It continued to hold that trend line. All right, so you know what? I'm going to keep a feeler on, but I'm going to stop out at most of my size. 'Cause this isn't what I want to see. And if it did get slammed right back down, I could always get back in.
How would you get back in?
I would want to see a volume break of this trend line.
And would you short into an up move, or would you just hit it, or would you?
I would just hit it.
Yeah, okay.
Yeah.
Because at that point you have a very distinct stop. So it's sort of like you can hit it, you know exactly where you're
Definitely, yeah. And something that I'm like definitely not going to do if like I get out of all my size here and it gets slammed right back down, like I'm not going to sit there and cry about it.
Correct.
Or be mad about it. I'm just going to immediately get back in and perfect, because now I know where I'm definitely wrong.
And you gave yourself permission to take the stop.
Right.
To hit out and give yourself room because you had a plan of what you would do next.
Right.
Versus just being like, I really hope this doesn't go higher because I don't know what I would do next. That is the difference between putting yourself potentially on tilt and remaining in control and finding a really good opportunity later.
Right, and my thesis was, like I said, there's longs trapped and there's shorts that got scared out, so they're going to get back in, and that selling pressure is going to force it lower, and that's not what was happening. And you can see we had some volume come in after we held the trend line, so
Yep.
that's not what I want to see. We get a squeeze, and it gets slammed right back down. Now it's definitely getting interesting to me again, and if we look at this 15-minute chart here, you could see a wick above that $1.30, gets slammed right back down. The next 15-minute bar fails $1.30, fails $1.30, perfect. That's exactly what I want to see. Following that, we pop into VWAP, gets slammed right back down. So just to add one more thing to this, now I see on the chart, I see a high, pre-market high, a lower high, and another lower high, which adds to my short thesis. We have this pop into VWAP that gets slammed right back down. So I look at this as another lower high compared to this push above VWAP that also got slammed right back down. And now we pop into VWAP one more time and form like another micro lower high. And it fails off VWAP really clean. And now this is where I'm shorting. I'm shorting in here. And my stop is just above this lower high. So $1.34. Targets on the day, all right, well, it did a really good job holding this $1.15, so I want to see how it reacts there. But ideally, I really think that this should go red. If it's going to be a true backside, it should go red. So it's going to break the prior day's close. And I think it should test like $1 at least, if it's really going to be the backside, right? So something I used to do in the past is I used to tee up a bigger picture setup and it would start working and I would cover into like low of day, right? And I'd be like, oh, that was a great trade, but not really, right? If you have a bigger picture idea, like you actually want to give it time to work. Like if you think that today's the day for the backside because of all these technicals we just talked about and it failed on the pattern and then it tried to squeeze to high of day and it failed again, like all of these things are telling me that today's the backside. So I want to actually hold for that. And for me to cover back into low of day, like I don't think that that's correct. I'm more so just like watching it when it gets there. I want to see how it acts at the prior day's close. So perfect little move here, breaks low of day on volume. And also one more thing. You see this trend line? Once it actually breaks, you get some volume confirmation that there's actually other people watching this trend line, right? So anytime you're making a trade based on a trend line that you have, you want to see like volume through the trend line to actually confirm that there's other traders looking at this line and not just you.
How many times I've done that so many times.
Like no one else is looking at the line.
You see the really clear break of the trend line and you don't see volume and you're like, oh boy, this is not
like no one else
right.
is really looking at it. So this kind of tells me that it's valid. So we pop up. Now I think that this should start trending pretty clean. So when we pop up, fail from the 21 EMA, get back to this like recent low here, I'm adding in here. So for me, there was really only two ads here and here. I took the short here, got stopped out. This is my re-entry. I hold it trades into 109, and it holds, right? But naturally, I think that there should be some support at the prior day's close. They want to defend that. And I'm just going to be patient and I'm going to give it time to work. If we look at the
Were you lowering your stops at all?
Yeah, that's a good question. So once it breaks low of day and trades into the prior day's close, at this point, I don't really want my stop all the way up here anymore because I think like it should start working and it definitely shouldn't get back to $1.33. So I just set my stop just above here. So now I have my stop at $1.25. Mm-hmm. Yeah, I think it should work now. So I'm only risking about like 5 cents now at this point. If we look at the 5-minute chart, trending below the 9 EMA, perfect. Can't really get above the 9 EMA. As long as it's holding below the 9 and 21 EMA, I think it's bearish. So I'm just being patient with it. Now it's having trouble at this $1.15, which was the previous, which was the morning low, and also you can see if you look at the 15-minute here, it was also support yesterday after hours. So now it's holding below there, which I like. 109 fails, and I'm covering into this momentum. So at $1, they tried to hold $1, so I covered about half of it, and on this move lower down into 94, 93, 92 cents, I covered most of it, and now I'm left with a 20% swing. And I don't care what happens with that 20%. I could just move around all day.
What I like about this exercise is you're going back through something you did, but you're going through it in steps and stages. And like, you're not just saying, oh, I would short it here and here's my stop. You're actually going through intentionally and talking about your decision-making process, because that drives your psychology in the trade.
Right, and oftentimes, when I go back, I actually find another check in favor that I actually missed.
Yeah.
I'm like, hey, maybe if I knew about this other level or whatever it is, if I recognize like this small micro pattern, maybe that could have got me in double my size.
Yep.
So that's another good thing about doing this exercise. I think I want to go over this MARA.
Yeah, I was hoping you would say that. I thought this was a really interesting one.
So last week on Monday, was this 2 weeks ago? Yeah, 2 weeks ago. We made a low in MARA, made a higher low, and kind of just like flagging. And yeah, it looks sort of like a bear flag. But what was really interesting to me is that the Qs were making new lows, but MARA is no longer making new lows.
This was off the Bitcoin flush. That Monday pre-market was the low for all these for that entire week, which was really interesting.
Exactly. Yeah. And obviously MARA, these Bitcoin miners, really, really beaten down. So, in a perfect world, this would have set up like a capitulation trade where buyers really would have stepped in and pushed it higher, but it still worked.
Yep.
And if we just look at Bitcoin quickly. So this trade took place on a Monday, and over the weekend, everyone's looking at 20K in Bitcoin. So over the weekend on Sunday, Bitcoin gets below 20,000. Can't really break down. See this $19,600 low, pops back above 20K, gets back below it a little bit, puts in a higher low. So, if it's really going to break down from 20K, it's just going to do it, right? It's not going to like play these games like this, in my opinion, if it's really weak. So coming in on Monday, Monday was a holiday, so coming in on Tuesday, I see really early in the morning, 2 o'clock in the morning, we test 20,000 again, and we're pushing higher off of it. So now I see a low, higher low, another higher low, momentum can't get going below 20K, and we're holding 20K again. So that morning,
and you could also use the on-demand feature for this. It's one of my favorite things to do.
Yeah, I think that would make it a little easier.
Go to that day, and you don't see everything that happened after that, which is really interesting.
So kind of like broke down, right? Have my trend line here, broke down, holding under 680, the 680 resistance in the morning after we hold 20K. MARA is gapping up, and I like that, and I think that it could push higher with how Bitcoin is holding 20K. So like a really simple idea, right? And in order to confirm that other people are looking at this, like I just want to see R vol. I just want to see R vol. So right off the open, and of course this $7 is important, right? You can see we tested here and fail, tested here and fail from it. So $7, it's important. Off the open, not really seeing much, but I do see that R vol is a 4. We push higher here, not really seeing much yet, but we hold $7 to the tick here. This low is $7, and I see a strong bid there. Pushes higher, I start to add. Well, I start to buy it. My plan is I'll add if it breaks high of day on volume. Hold $7 again. To the tick, I think this low is like 701, it says, so perfect. You can see we're holding above VWAP, holding green on the day, holding $7.
One thing we've talked a lot about is the volume pattern that we've seen in a lot of these. Does anybody want to talk about that? Does anybody see it on this chart? The volume pattern that we've talked about, preceding breakouts like probably 20 times at this point.
It's like shallow volume on the pull-ins.
Right. So look at what happens from 936 roughly to 944. Like on that consolidation, there's like no volume there, right? And it's holding the 7, and it's like there's just like such a drop off in volume.
Yeah. start in here, comes back, holds 7 again, pushes higher, I'm adding again. And now, I'm feeling pretty good about it, noticing the volume, like Jeff just mentioned. And it breaks high of day on volume, and I'm adding. Now I'm in as much as I want to be in. And
where are your stops in this?
yeah, so really simple. Since it held 7 so well, if it and held the 21 EMA and held VWAP, right? So if we're back below 7, the 21 EMA and VWAP, I don't really want to be involved.
Yep.
But what I'm not going to do is I'm not going to set my stop at 7 because there's a chance to come back and take it out before it goes back up, right? So, when I'm putting on risk for this trade, I'm kind of saying to myself, well, I want to see, in order to get me out, I'm going to need to see it close below 7 a couple times. Yep. So like I'm accounting for that in my risk, right? Like worst case scenario is probably like 695 or something like that, 693.
Because how many times have we seen it? It's at 715, has one hard down move to 699. It's a really ugly candle. Everybody's freaked out that it's going to roll, and then all of a sudden they slowly bid it back up, and it's back at 712, and everybody.
Yeah, and then you feel terrible.
Yeah. Then it's really tough to re-enter the trade because you just took a stop on a scary candle.
Right. So from there,
particularly when you're fully sized in the trade, that's the worst. Is you've worked really hard to get in the right position. It comes down.
Yeah,
you
get taken out of all your sides.
Yeah, exactly. So I really like what you were talking about with let the psychology of the stock tell you that it's done. So.
Right, and just a quick mention, something I see new traders do. They say I'm going to put my stop at VWAP. I hate that so much. Your stop should not be VWAP.
Yeah.
It should be a price on the chart where it invalidates your idea.
Correct.
So it's like I look at VWAP as an area. It's just a general area. So from there, you can see we trend really nicely. We come into the 755, which is...
Can we talk about specifics before we get to that?
Sure.
Specifics with adding. So are you adding just for your trading? And I know everybody's a little different, but just to put some context in it.
Yeah.
In your position, are you adding 50%? Are you adding 100%? Are you adding 200% to your sizing?
Yeah, so over here I'm getting like half size because I thought that there was a chance after it held 7, it could just rip right away and make new highs.
Yep.
So I'm in 50% here. Hold 7 again, I added like 25%, and then this was the last 25%.
Yep. Okay.
And for me, this ideally would have traded to like $8 and our vol would have sustained, but it didn't do that. But the point I'm trying to make here is like this was going to be a trade to hold. Typically for my trades to hold, I'm sizing in as I'm getting more confirmation because I plan on being in it for a long time. Whereas if I'm taking a momentum trade or a scalp, usually I'm saying this should work right away here. And I'm getting all my size at once.
Yep.
So that's just like my style of adding for different types of trades. And then, from here, starts moving higher, perfect. There's this little gap fill here. So I'm like looking at this area as potential resistance. You can see tag 750, pulls back, but it's a clean trend, right? And if something's really gonna trend strong, first pullback into a 9 or 21 EMA, it should hold and continue higher. It does, but something I'm noticing is that our vol went from a 4 and now it's like a 2.9. That's not ideal. To me, that shows like people are losing interest. People aren't as excited about this as I am.
Yeah.
Right? It's not reflected in the volume.
Versus a 4 to a 4.2 or a 4.6
if it's sustained at 4 and grew,
or even like 3.7, but having it cut in half is not what you want to see.
No, it's not what I want to see. So I'm not going to be stubborn about that, and I'm going to, take profits.
Okay. So even though you initiated the trade as a trade to hold, you're letting the stock tell you that maybe this is more of a move-to-move trade.
Exactly.
Okay.
Exactly. So now I'm starting to get a little cautious, and I want to be more proactive. So I'm switching my mentality from trade to hold to let me start taking profits. So we push higher, make a new high, but it's kind of stalling out. And if this is going to be really strong, I don't think it's going to make a new high by like 10 cents and like stall out and move lower. So I'm taking profits. We push up to 770, fail. And I think it goes without saying, while this is happening, like I'm watching the price action on Bitcoin as well, and letting that guide me a little bit. You know, we pop up to 770, and now I'm being aware of the fact that we're up 1 ATR from the low now, and our vol is declining.
Yeah, that's perfectly fine if our vol is accelerating.
Oh yeah, if it's accelerating, I'd probably be actually like looking to add.
Yeah, exactly.
Actually, I would definitely be looking to add if our vol was increasing.
Yeah, but the fact that it's declining and you're starting to get extended now, it's just...
Yeah, and Bitcoin looked a little tired.
Mm-hmm.
You know, we filled this gap again and we're back up here. So I'm looking at this as like a little area of potential resistance. Right in here. So I think by this time, this little lower high pushes lower. We're back below like the 9 and 21 EMA after holding it really well. I'm out of like 75% of it. Now it's starting to have trouble at this 750 level, and we're holding below. The EMA is cross, red bar, red bar, red bar. I'm just going to take profits on it.
What would get you back in the trade?
Later on in the day, we came back into VWAP, held really well again, started curling up.
Yeah, it looks good.
Yeah, it looks good. So what I did was I put on like a feeler, because number one, like Bitcoin at this point, Bitcoin didn't look really strong to me.
Yeah.
And of course, it's like the middle of the day, and from 12 to 2, that's where I'm like very cautious about new trades. So, you know, I would say most of the time I won't even put on a new trade from like 12 to 2, 90% of the time. So like, I like this pattern, and typically if a stock is going to continue to be really strong, ideally this is like the perfect place to buy it, right? After it pulls back in and holds VWAP. So I wanted to be involved with something, but really what I made on this, I was probably risking like 10% of the P&L that I had locked in
that specific symbol. You're not thinking about your daily stop.
Oh, no.
You're not thinking about everything
every trade
else.
is different.
Yep.
You know, Mara has nothing to do with my trade in any other stock, unless it's like a Bitcoin related stock.
Yeah.
Yeah.
That's a really good point, because sometimes it's easy at 12 o'clock to let your mind play tricks on you of, well, I could only risk 10% of my daily stop here, but really if you're risking 10% of your daily stop and you only made 50% of your daily stop in Mara, you're actually risking 20% of the P&L that you made in Mara, which is a big difference than 10%.
Right. I'm never really, I think one P&L based rule I have is if I have a really great morning and there was like an A+ setup, or even like a couple B trades that I did really well on, I'm going to compare everything else for the rest of the day to, you know, what I made on those setups. And if something isn't as good, I'm not going to risk as much.
Interesting. I like that. Yeah.
And if it's slower, I'm going to make sure I put into place a give back rule for the rest of the day. I'm not going to give back more than 50% of my gains from the morning. And that's something that also helped me. I really stuck to that rule a lot, like my first 2 years, and I think that's something that really helped my consistency.
It forces you to compete with yourself, right?
Right.
Go ahead.
Question. So you said you're watching Bitcoin. Are you watching like Bitcoin on like trading view, or are you watching like the Bitcoin futures? Which one do you watch?
I'm watching the one on TradingView just because it's way more liquid than the Bitcoin futures. Any other questions?
Yeah. How are you managing risk when you're trying to add to a position when it's not necessarily near a place that has like a good risk to reward stop?
So for this one?
Like if you wanted to add to it higher, how would you manage the risk there?
Are you talking about like if our vol
if our
was
vol had been
increasing
and you'd wanted to add to it in that area?
Yeah, sure. So I started watching this 9 and 21 EMA like my first year trading, and then I didn't, because I heard this other trader use them and I respected this trader, and you know, I'm like, I don't know if it's really working for me, so I took them off, and then something made me put them back on again, and they've been on my charts for like the last 2.5 years, and I've just noticed that when there's a really strong trend and R vol, a first pullback into the 9 EMA, like it's gonna hold and go higher if it's really a strong trend. So I would look to add into here. And if it started to hold below, that's not really what I would want to see, so I would cut it. And I would just assume.
Would you cut the ad or cut the whole position?
Oh, I would cut the ad.
The
Yeah.
ad, okay.
So every ad has a separate stop.
Yep.
Okay, so you are trading separate stops for the different.
Yeah, but down here, when I'm buying here and I'm buying here and then I'm buying here, these don't all have separate stops because I'm basing it off the fact that it's holding VWAP and $7.
Okay. Yeah. Thanks.
Basically, when it starts to work, that ad now has separate stop.
Right. If it starts to work and then you're adding because you think it could continue, like that needs a separate stop.
Mm-hmm.
Yeah.
And you'll find different traders do it differently a little bit, but for the most part, I think when you initiate a trade after the initial idea of it, it's a new trade. So it needs a different stop.
Right.
There's sometimes when your initial idea is this thing's going to be a huge runner, and you're not playing it for a move to 8, you're playing it for a move to 13. Well, if you can add at 750, but you're playing for a move to 13 and you're getting everything that you want in it, then it's probably okay to add and say this is all a part of one position.
That's a great point. I'm glad you brought that up because sometimes I'll have like a bigger picture super A+ setup where I will be adding to it, and I'm saying like I think the risk reward is so great that I need to make sure I let this work, so I'm going to give it actually a really wide stop.
Yep.
So yeah.
But you're going to piece into it over time, and you're willing to kind of give it the room it needs because you're giving it the right stop for that trade, not just some arbitrary stop that you're giving it because you think that stop's important.
100%.
Okay. That's what my biggest pet peeve with traders is they're like, yeah, it's a 10-cent stop, and it's like, yeah, but 10 cents isn't the right stop on that, or it's $1 stop. That's not the right stop on that. Like you have to give it the right stop for the thing. I hate chess. Sorry, Marvin. I'm reading this book that somebody recommended to me, and I thought it made so much sense. It was Shark talked about it too. Thinking in Bets. He was the second person I heard, and he was saying, and in the Thinking in Bets, it says life is like poker, not like chess. And I thought that made a lot of sense. Their argument they made was the idea of chess is a game with finite information. So there are only certain moves that you can do, right? And you're not betting more or less on every move that somebody makes. It's a game that whoever has more information will win at some point.
Sure.
Poker is a game where there's constantly moving information. You may be a much better poker player than me. I can still win and clean you out in the right day.
Of course, yeah.
And that's where I think trading in life is a lot more like poker than chess.
That book is actually next up on my list.
Is it?
You like it?
I do. I'm
Okay.
like 20 pages in, but I like it. It's
Great.
pretty good. So
I still want to.
that is, yeah. We should do a little book club. No, but so when we're thinking about, I think that particularly with trading, we should never think about it like chess, because I think then you remove the element of bet sizing, which is such an integral part of success in trading, is understanding how to bet size appropriately, understanding when to pull risk off the table, which is something you cannot do in poker. You can't be like, oh, this hand's pretty good. I'm going to take let me just take 70% of that winnings. I don't like what you're showing me now, which is a unique advantage we have in trading versus poker.
Yeah, and that's something I'm starting to learn is more and more important as I progress. Like your bet sizing can't be linear.
Yes. Yeah. There are even traders here who bet size in a linear fashion, but I would agree with you that I'm
starting to realize that if you're always, even if you're very consistent and you bet in a linear fashion, you're going to be good, but you're never going to be great, I think.
That's a good way of putting it. Yeah, because you can be very good.
Right.
But you just have to be very good all the time if you're going to bet.
Which is tough.
Yeah, and if you're betting in a very unique fashion where you're switching your bet size based on the probabilities of success, I think, particularly early in your trading career, you're actually just buying yourself better opportunities. Because if you size up in the better opportunities, you're buying yourself room because you're going to suck sometimes. You sucked when you began. I sucked when I began. Both of us still suck some days. But on those really big days, you buy yourself an opportunity to learn from those days when you just kind of suck.
Yeah, definitely. And I also think it's important to recognize when you're sucking so you could tone it down.
Correct.
That way your confidence isn't destroyed when there's an A+ opportunity and you can't take advantage of it.
Just like you said.
That's the worst
Yeah,
thing.
the 3 days, 3 red days. Like the expectation on our desk was, I'm sure it was when you started, you're profitable 4 out of 5 days a week. If you're not profitable 4 out of 5 days a week, then something's wrong and you need to tone it down until you figure out what is going on.
Yeah, and I think Bella would even recommend that if you're red for 2 days in a row, that something's wrong.
Correct. Yeah.
I just find with myself 3 works better.
Yeah. But that has been the expectation on our desk is you are profitable 4 out of 5 days a week, and if you have 2 red days in a row, you need to take some time to figure out why you have 2 red days in a row. Like I know that's a weird expectation, and it's a high expectation, particularly for developing traders who are given the latitude to kind of play around. But that really should be the expectation for your trading career. Is if you're red 2 days in a row, there's information in that you need to figure out. Any other questions?
Yeah.
How are you checking if RVOL is decreasing or increasing throughout the day?
I actually have a filter. Someone on my team built me a filter where it'll spit out the RVOL every, I think it's like every minute or so.
Of the stock that you're in?
Of the stock that I'm in.
That's cool.
Yeah.
Is it linked to your market maker box?
No, I have to go in there and plug it
Okay,
in.
gotcha. Okay.
But it takes like 10 seconds.
Yeah. That's really smart.
So does it compare the volume done up to that point in the day compared to the average volume of that time period from previous days? Or how does that work?
I believe that's the formula. Yeah. I think
So
it's like over a period of days, maybe 20 days.
So it's like so at 9:35 as an example, if stock's done, I don't know, 500,000 shares, and the average 5-minute first period from the past 20 days was like 250,000 shares, and the RVOL is 2. Is that how that works?
I'm not sure.
Are you talking about the
exactly.
raw RVOL score or his calculation?
His calculation.
I want to do what you're doing.
Yeah.
I think that is of more value because it's not looking at the last 20. RVOL's a 21-day on our chart, I think,
believe so.
on our platform.
Yeah.
So if you're thinking about the RVOL, you're looking at the last 21 days. That's a lifetime. That's a month. I mean, that's like a lifetime in our trading. But if you're talking about the last 5 days, particularly for breakdown trading, that is something I'd like to work with you on because that is something that I think is of much greater value.
That's really interesting.
Because it's the same concept that you're talking about. It's just shortening the time frame to match
Right.
whatever you're trying to do. So.
Which could be really helpful.
Correct. Yeah. Because what if Mara had
Earnings,
a huge earnings or a huge
It would
volume
be
day or
skewed.
something like that? Yeah.
Right.
Yeah. It's very interesting. So yeah, I like where your head's at on that.
Me too.
So we can work together, and then Justin can help us. Any other questions, thoughts, comments, concerns? Look, at the end of the day, like trading's really difficult. I am not going to be the one that is going to say trading's easy, trading's never a challenge, all that stuff.
It's the hardest thing I've ever done in my life.
It's the most rewarding too, right?
Yeah, definitely.
Like there's zero comparison to anything else I've ever done in my life, and it is any other like aspirational challenge that I've had. It's really a study of how good can you challenge yourself to be more than anything else, I think, trading. And these exercises are all just kind of opportunities to try things that other traders on the desk have found are helpful to them. Like we talked about at the beginning, like you may find that it works for you, you may find that this is something that doesn't work for you. That's perfectly fine. Like this is not an expectation at all, but this is an opportunity for you to learn from somebody who's been doing it very well for a long period of time and is constantly striving to get better too. I know we talked earlier this year about your goals of how you're going to get better this year. And I can see how in this exercise alone, you can think, all right, if this is where I need to be on a P&L perspective, is this an opportunity for me to get there? How do I size myself appropriately so I can get there? How do I make sure I'm staying within my risk controls so I'm giving myself that opportunity? And you're getting so many extra reps
Yeah, and I just think the biggest thing for me now is looking back at the trade of the day or the trade of the week and thinking, how could I have made double on this? You know, what was the setup of the month? How could I have made 3x what I made on it?
And not just thinking bigger picture, how could I have done that?
Oh no,
Thinking
you gotta
specifically what
right,
happened in each bar.
specifically,
Yeah,
right.
yeah. Because
You know, like what moment in time, like where was it?
Yep.
Where was that ad where I could have doubled up?
How many times have you done this exercise and then something just shows up for you?
Yeah, quite a bit.
Yeah.
I think one of those was on AMC where I was like, I've seen this before.
Yeah.
Yeah, just from doing this exercise, like this play, no, this is a breakout trade. I know what the characteristics are, like it should hold a level, it should hold above VWAP, it should hold green on the day, it should hold above the 9 EMA, 21 EMA, yeah. You know, I would have liked to see more volume on this breakout, but everything is pretty much there that I need to see.
Yeah.
And just from doing these exercises like this, and I added here because of this, and my stop was here, you know, you just become like robotic when you see these, when you're at your desk trading. And like, you don't really need it to think about it too much. You just put the trade on, you know where the stop should be, and you accept the risk, and whatever happens, happens. You know, I think people ask a lot, like, how does Shark trade 40 stocks at once? Well, because he's done this thousands and thousands and thousands of times. So he knows where he's wrong. He puts the trade on, you know, he puts the stop, and he's cycling through the stocks, and he's traded all these setups thousands of times. So he knows them like the back of his hand. He knows how they should act, and he knows where the stop should be, right?
Yep. I would agree with that. And he also didn't, he was in here and he talked with these guys last week or 2 weeks ago. And he talked about how he didn't start trading 40 things. He started by trading 1, and then 2, and then 3, and then 4. And it's like exercises like this, you trade 1 thing at a time. Well, if you start trading it really well, then maybe I can trade 2 things at a time. Let me try that.
Yeah.
Okay, now I trade 2 things at a time really well. Now I can
Right.
trade 3. Like, you know, you get to 40 or you get to 20 or you get to whatever, but you don't start by trading all that stuff because it's too easy to miss the really important information. You start by knowing what setup you're trading and knowing what trade you're taking.
That's a really good point. And any mentee that I'm teaching, I tell them, until you're consistently profitable, focus on 3 stocks, max off the open, max.
Hey, go ahead and click our subscribe button so you don't miss any of the videos that we're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at S&B, train and trade well.